How strong is Opendoor's liquidity position amid a housing market slowdown? Opendoor investors, listen up. And of course, if you haven't done so already, make sure you give me a follow right there. I'm going to go through this article just for you. Opendoor Technologies entered the second half of 2025 with a stronger liquidity position as the housing market remains under pressure. The iBuyer ended the second quarter with $1.1 billion in total capital, including $789 million in unrestricted cash, while carrying $1.5 billion of net housing inventory across 4,538 homes. In May, the company issued $325 million of convertible senior notes due in 2030, extending maturities on $246 million of existing convertible debt by 4 years and adding $75 million of incremental cash. This balance sheet strengthening is particularly relevant as transaction volumes decline. Management guided for sequential revenue drops in both the third and fourth quarters of 2025, citing persistently high mortgage rates, weaker buyer demand, and unfavorable mix of older, lower margin inventory. Guys, I've been talking about this for a while. The real estate market to end the year for Opendoor is not looking good. You must have a very long-term outlook for this stock if you're invested for the long term. The added liquidity provides a critical buffer, ensuring Opendoor can navigate a period when contribution margins are expected to compress towards the low end of its target range. Importantly, the financing framework also highlights Opendoor's continued access to credit markets with $7.8 billion in non-recourse asset-backed borrowing capacity, including $2 billion of committed lines. The company maintains flexibility to fund acquisitions when market spread narrow. The combination of unrestricted cash, borrowing headroom, and extended maturities signals a proactive approach to liquidity management. Looking ahead, Opendoor's ability to balance liquidity preserves with growth investments will be a central investor focused. While near-term financial results remain pressured by macro headwinds, the strengthened cash position provides runway for the company to weather volatility and continue executing its long-term pivoted toward a more capital-efficient business model. This is one of the reasons why they hired a new CEO. We got to get a little bit more focused and a lot more products and definitely more efficient at Opendoor. The writer also did a little comparison and talked about OfferPad Solutions, ticker OPAD, which I know a lot of people are also interested in. And it's saying OPAD is advancing its operational efficiency through a diversified asset-light business model that directly impacts its balance sheet fundamentals. The company's strategic focus on capital discipline is evident in its second quarter results with a 39% improvement on capital discipline. OPAD is advancing its operational efficiency through a diversified